Oh, this is Sam Wong. Today is June the 8th, Sunday. Just want to give you a recap of last week. The market has performed very well last Thursdays and Friday, driven by a combination of economic data, corporate developments, and investor sentiment. Companies like CrowdStrike and Uber report among very strong earnings, boosting investor confidence and contribute to the overall market value. And also the expectations that the Federal Reserve would implement rate cuts that are supporting the stock prices. The last step post strong growth fueled by a rebound in major tech stocks like Apple, Microsoft, and Alphabet. The S&P 500 followed suit, closing high with solid performance in both growth and value sectors. And market will experience continued strength if inflation data is favorable and corporate earnings meet expectations. Of course, conversely, if the inflation is not prompted the Fed to maintain or lower rate, then the market may be the other way around. And technical analysis indicate that if the index surprised 5980 level, which is already over for S&P 500, it may signal beginning of more substantial rally, which we can target between 6100 and 6400. So we'll see if it's going to hit that. And obviously, again, for those of you who in my last video, analysts, there are quite a number of analysts expected that S&P 500 will hit 7,000 at the end of this year. So for those of you who follow my video, you should be very happy and very glad that about the return of robots. And you can see that in the diagram. Though the company is still reporting a loss, the outlook seems to be very bullish. It's also very close to $100 target that I've been saying in the past video for those who have followed me, which I'm really thanking the fans for supporting me for the video. But however, you have to be very careful about this level. I already start decreasing my position exposures at a price of $80, just that you know. And during the Liberation Day, if you listen to my video and bought some stock at the time, I was telling people, well, you've gone down so much, it's good time to buy it around $53, so let's say. You will have made 60% return, which is well beating the market. And the next explanation and next market stock I always like to talk about is XYL and Helium. It actually, it wasn't performing very well, but at one point very close to my $2 target here. And I'm still looking forward to $2 probably on the next earning report, which is maybe a month or so between now and then. And you actually have three, for short term, however, you actually have three capital gain opportunity. So on March, there was an uptick from $42 to $60, which is 12% return. On April the 8th to April 29th, which is about 21 days, you will have bought at $21 around that level and in it at $61, which is 33% return less than a month. And if we hang on a little longer, which is actually jumped up to this point, I'm talking about $91, which is the peak of the price in April and May. And obviously, then after that, it was coming back down very quickly. And if you bought it again low end, which you listened to my video just a week ago, so you bought it about $20, and you will now at $50. I mean, you uptick it to $70, but let's say $50 is where you're at. You still make a pretty good return. And again, I still see potential upswing on this stock as they have a couple of good news announced, but it's just a matter of when they're going to really be able to do economic scale on this renewable power engine. The next thing I want to talk about United Airlines. Again, for those of you who listen to my video, it was actually went down to lower than $60 on my last time. The price has sold at about $35 to $42 ranges of stock. And there's a lot of looking news just around the April-ish time when the Liberation about tariffs, talk about fear of recessions and slowing down travel. And so that's why it's a golden opportunity to start had dropped. And I really recommend buying around that. I say don't worry about United Airlines, just go ahead and buy that from a high end $16 to drop it down to $50, which a 50% cut in such a short period of time. Where in the world you're gonna find it? Although, of course, the stuff for $40 uptaking to $116, right? So now you came back to $84. So that's just 40% return, which again beating the market performance. I actually look at this one. We still have a little bit more momentum to $90 or higher, and I will probably exit my positions and buy back again. Watch for another opportunity for that one. And again for that, the other side of it is I look at CCL. So right now it's at $24. I sold around $21, just that you know. But there's still opportunity for that stock. I mean, all the travel stock, as long as you pick the right one, there's always opportunity to buying, making the momentum and gain and profit from the market. The next one is ACLS. This one is a little bit, again, I use the word patience for those who listen to my video. And the stock actually 52-week high is 158.61. I still looking at this one if the semiconductor rebound and where you actually get hammered now these, lately compared to the small cap versus the large, high tech companies. But eventually this stock probably will coming back, and this stock does make money, not like the other smaller stock. I actually recommend sometimes they're not making money and losing money. The stock really at the low end of liberation day was really 52, really $40. But you would have bought it, under my video about maybe I would say around $50, probably get around the range. Right now it's at $63, and the target short term probably if this coming week will be the market continue to be bullish, expectation of interest rate cut call and confirmation of the tariffs talk were actually going well, then you will probably hit $70. So if you think for 50 or 70, $20, that is 40% return, again beating the market expectation in very short time. Again, I'm different than other investor and analysts, and I'm looking for stock that is really way undervalued. And the expectation for those stock are looking at short-term capital gain 20% to walk, which if you can take two in a year to take advantage of it, you already beat the market. Because the market index, even in a very great year, give you 35% return. In a year not so great, and 10, you could have a negative 5 to 10% return in a given year as well. So you weigh the average about still 20% return in a year. Our next one is now lately I'm buying some Chinese stock last week. So my holding was Alibaba, BABA. I really like the EV stock that you have heard me a lot, BYD, and then Pinduoduo, PDD. So Pinduoduo actually the price range you look at is really fluctuated. And again, it was at one point it was so bullish, saying $300 a share. But actually, when the risk of delisting from the exchange market, it dropped to $30, which is like 10% of the peak. But now it's more stabilizing around $125 range at one point. So I still thinking the stock still momentum from 100 back to 125 in a very short time, particularly if Trump actually have a tweet saying things were going great with the top tariff stock with China. So I expect the Chinese stock will actually this week should be going well. So it will be 125 and 25% return quickly. And also BYD, just I say I like this stock a lot, and I bought it a little bit high, maybe $50. But I'm more looking at future because the EV space continue to grow with demand. So and actually the stock have continued, the company have continued selling a lot in the European, not only the Chinese market but Europe. So I look forward to this one continue to grow. And then obviously lately there's a CATL, which is a battery company that are actually did the IPO in Hong Kong exchange market. So that kind of make this stock maybe a little bit along the line and pushing and being bullish. And also Alibaba, I bought some Alibaba, and I actually sold it buyback $100. So now my return is 20%. But at one point it was high here. It's just a high peak point, $147 here. So I'm expecting if Ant Group is going to go IPO, this stock should be very bullish and push it. And with this seek and all this high tech supported by Chinese government, you will probably continue to be bullish. And then the foreign investor actually are buying these stock at the really low end, so they already profit a lot. Now whether they will continue to hold the presence or selling is a market. Is all about tariffs, market sensitivity, and also maybe some geopolitical risk, if you will. The last stock I really like too is XPENG Xinpeng. Again, I do a 5-year chart in such just to demonstrate that the stock at one point was at $70 high and dropped it below like $10, and now it's at $20. So that's really a big string of potential. The next thing you know, probably this stock will grow once they turn around and cut the losses, become profitable. You will hit probably $50 mark. So again, this stock I'll look forward to. Maybe next time I'm going to sell at $25 for short-term capital gain, and then for long-term, I would like to hold positions and wait till hitting $40 or more. And last time I sold it at $23. Again, I really hope it all depends the market how all the earnings gonna announce. And just want you to know, for those of you who listened to my video previously, there was after Liberation Day, it was just like Tom Lee saying, there was a V-shaped recovery. Okay, it really did recover in a V shape, and you look at the index, very good example, come back to the point almost position level out. And then what happened is then you drop the market, tip back a little bit with Tesla. Obviously, you can see the stock from $300 dropping back to 200 lush. Okay, and then all that stuff coming back down, and then now with the news again, with some good news and earnings, is kind of rebound back again. So the deep that I was talking about, where why I sold 50% or more on the presence of the stock holding, is again I only made more than 20% profit on these stock. And number two, learning from a lesson of V-shaped recovery. I mean, you were actually at one point you were losing 20%. You get back 20%. I mean, level plus 20%. Well, really, from a short-term perspective, 6 weeks, you're really a good position to walk. So that's why I decreased my exposures. And then the stock came back down again. On some of the stock, I put a little much position buyback XYLM, which again, it was again $1.80 and $1.60. You see, you took the sum all the way back down to $1.20, right? So those are the good opportunity position to buy back. Robust has been really, really high up, so I wasn't able to buy back. But United, I bought it on Liberation Day on that as an example. So some of this stuff I did watch the market and look at it, but right now with the momentum continue to growth, maybe it's opportunity. If you're holding or you don't, you can increase a little bit exposures and then watch for the next week. But then I anticipate the market may be another dip again before you really rally again July. But the July will be a last earnings and the interest rate cut if you materialize. And then Trump is going to work on the corporate tax cut, which is another catalyst. Again, we'll look at the terrorist uncertainty, what's going on with the news and the global, how European talking with US. But at this point, I think the market expectation should be upticking. Should be profiting. You should be looking at it. And until my next video, hopefully we'll make another 20%. Hope everyone have a great and wonderful week, good health, and your wishes come true. Again, any questions, feel free to email to me. Have a nice and wonderful week.